Hey everyone, in this video I was going to do an interesting stock versus stock, dividend versus dividend. Which one is the better stock to buy, AT&T or Deere? Now to answer that question, I'm going to compare these two dividend stocks across 4 financial metrics, including the dividend yield, to answer which one is the better stock to buy towards the end of the video. So let's get right into it, starting with the dividend yield. AT&T boasting a dividend yield of 5.16%, while Deere stock boasting a dividend yield of 1.2%. But remember, as I usually say on this channel, when you're investing in dividend stocks, it's not only about the dividend yield. It's not only about the dividend yield, because if the stock price falls, it can take away your entire dividend yield. So you want to look at other metrics that will determine if the stock price is likely to go up or down in your investing time horizon. So let's look at those other metrics. Starting with revenue over a trailing 12-month period, what you notice here is the different trends, right? You see AT&T's revenue coming down to 121 billion over the last 12 months, while Deere's prospects have improved, ending with revenue of 58.68 billion over the trailing 12 months. And I will tell you, looking forward over the next year to 3 to 5 years, Deere's revenue prospects are much better than that of AT&T. AT&T operates in a much more mature industry that's not growing rapidly and is facing a competitive threat from T-Mobile. Deere, meanwhile, operates in an industry that's growing, that's got innovation fueled by tech, fueled by autonomous equipment coming up, and that's driving a lot of demand for Deere's equipment, and revenue is growing. Prospects for Deere are looking really strong. The next metric I wanted to look at is the cash flow from operations to sales. And comparing AT&T and Deere in this metric, you notice that AT&T is well ahead of Deere at a cash flow from operations to sales of 27% compared to just 11% for Deere. Now Deere's coming off of a big down cycle in this as it invested in these new initiatives, invested in expanding its inventory, and now that metric is rising back up again. You look at the longer term trend line, it was growing very nicely with a couple of big dips in between those, whereas AT&T has a more consistent trend line here with a better cash flow from operations to sales. Finally, I wanted to compare these two dividend stocks on valuation, and judging by the forward price to earnings ratio, you notice that Deere is much more expensive than AT&T, trading at a forward PE of 12.66 compared to a forward PE of 6.45 for AT&T. Although, I will say, if I had to pick one of these two dividend stocks to buy today, I would pick Deere. I would pick Deere because its prospects over the next several years are so much better than AT&T. So much better than AT&T. Demand for Deere's products are soaring. They've been higher than ever before. Deere has a backlog of orders. It recently instituted double-digit price increases, so profitability is increasing, as you saw earlier. And I think it will only be a matter of time until Deere really improves and catches and closes the gap, because AT&T's prospects, as you saw earlier, look at the revenue, it's coming down while Deere is going up, and so they are converging, and it's only a matter of time, in my opinion, before Deere eclipses AT&T in terms of overall profitability, cash flow, revenue prospects. Maybe not in one metric, but overall value-wise overtaking AT&T. So for all those reasons, I would pick Deere over AT&T as the better dividend stock to buy right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.